How do I beat the trading algorithm? A question that I've heard more often than where can I buy a packet of fish and chips? So, how do you beat the trading algorithm? What's this all about? Is there an algorithm that's causing you to lose in trading? Algorithms are a big thing these days. Everybody talks about algos and AI and all these things that are happening. But when I started trading 33 years ago, there weren't even computers. I was simply trading with a little pencil chart and a ruler. And that was me and a telephone. In those days we had dial-up telephones and we used to call and try and get our trades in and out on a regular basis. Now, can you imagine that? Now you're talking about how you can beat the algorithm. But yes, I do have a solution to this. Yes, I do have a way that you can actually win in the markets and beat the markets. And it's all about the little business plan that I give you in every single video. But today, I'm going to talk extensively about why and how you beat that algorithm, why and how you're losing in the markets with these charts and systems, and what you need to get ahead. But before we do that, let me introduce myself. For those of you who don't know me, I am Rob, and for those of you who do know me, guess what? I am still Rob, and it's Coffee with Rob as usual, and we're having some coffee. Without further ado, let's start talking about the one thing that's going to make a difference to your trading. Now, here's the main crux of the matter. If you're new to trading, everyone's told you that there's a little algorithm monster in the background running around, taking out your trades, looking for your stop losses, trying to find your take profits, and watching you at all costs. Well, let me put your mind at rest right now. Guess what? No one's watching you, number one. You're all on your own, and it's a really lonely game out there. So don't expect every time you take a trade, you're like, ooh, did someone see me do that? I hope not. You've all done that, haven't you? I know, we've all been there. We've all felt that scenario. No one's watching you. The other misinformation that you have, this whole thing about the algorithm searching out my stop loss. No one's searching out your stop loss. If you put a stop loss in the market, you put your stop loss in the market, you put it there. What do you think you've done? Effectively, what you've done is you've advertised where you want to sell your stock. Now, if you're in business and you want to sell something, you put a big sale sign outside and you say 50% off, get this at $7.99, and everybody comes in to buy it. And that's exactly what you do when you put your stop loss in the market. You put a big sale board out in the front and you say, come and get my stock, it's $7.99, come and buy it. So what do people do? They come and buy it. It's an order in the market, it's there to buy. You see, what you forget is the markets are not made up of squiggly lines. The markets are made up of human beings. People who want to buy and sell things in the market. People who want to do business and trade. And the only way to do that is to have a sale or to look for sales and buy things. What do you think the market is? Really, do you think it's a bunch of little robots running around in the background drawing squiggly lines? Or do you actually realize you're actually dealing with real people and you're actually buying and selling stock in the market? But you know, my point is to show you how to get around the algorithm, to show you how to get around the market and how you can actually win in the markets. And I'm going to get to that in a moment. We are going to talk about that extensively. But I'm just trying to get a clear picture for you. I'm just trying to get you to understand a little bit better, because this is where the issue lies. You go into the market because you watched a few YouTube videos, maybe someone promoted it somewhere, maybe there was some adverts on Facebook or something. I really don't know. But you got intrigued because they told you that you can turn $100 into $1 million and you can get rich quick. But the big thing is, of course, you can get the freedom of maybe working from home or not having to go to a job every day. You can actually just be a trader at home. And this is what intrigued you into the market. Big problem being that you've now been intrigued, you've now got yourself involved in this market because they told you you're going to make a lot of profit. And the next thing they do is they sell you a really expensive course, one of those like $5,000 jobs, you know. And you pay the money and you get involved in this course and they show you all these squiggly lines. And it might be a candle system. It might be an MACD system. Who knows what kind of system they show you. But they show you how you can take profits off a chart. This is stuff that I show you guys on a regular basis. And this is stuff that I can teach to a primary school child. It's effectively technical charting. And that's just the system. And the system, what it does, you need a system. What the system does is it allows you to take a high probability trade and it allows you to manage that trade. But what you need to know is that charts cannot predict the future. Charts cannot predict which way the market's going to go. They can give you a high probability because human beings are creatures of habit. So likely what happened in the past will in all likelihood most likely happen again in the future, which is why we have the charting. So we look at what happened in the past and we repeat it in the future in the hopes that it'll happen again. That's what we're doing. That's exactly what we're doing in the markets. We're not doing it because we think we're geniuses and we look at the charts and we say, oh, it's going that way, so we're just going to trade. No, we look at the charts and we say, in all likelihood, this should happen again. That's why we use the charts. And then we manage our risk with the chart because it gives us the capability to manage that risk. And that's why we have the charts there in the first place. Guys, I'm not taking you to the charts today. This is a chat from the heart. I'm trying to clear a few things up for you guys here and make it easy for you to, let's say, beat the market, get around things in the market. The thing that you need to understand in the market is those charts are not going to make you money. Trading is 50-50 on the charts. When you take a trade on the charts, no matter what your system, no matter how much you've been told it's going to give you a win rate, end of the day, it's a 50-50 game. You've got a 50% chance of winning. You got a 50% chance of losing. And I always use the coin analogy. If I flip a coin 10 times, 5 times it'll land on heads, 5 times it'll probably land on tails. But if I told you I'll give you 2 for every heads and 1 for every tails, there isn't a person on the planet that wouldn't choose heads because the odds become in your favor. And this is how we apply it to our trading strategy to beat the markets. What do? Very simple, guys. Very straightforward. You don't need a pen and paper because you can watch the video again, number 1. But you don't need a 1,000-page business plan either. This is like a 3-step business plan, guys. Simple, straightforward, easy. Now I say to you, if you were going to open a store in the high street, or if you were going to open a factory or any kind of business, wouldn't you think you'd need some kind of business plan? You'd want to know what kind of factory you're opening. You want to know what kind of business. Am I going to need staff? How much is it going to cost me? Where am I going to have my premises? So on, so on, so on. There's a number of things you're going to need to know before you open that business. Why is it when you get into trading, you don't need to know all that stuff? It's just, I'll just start trading and I'll have a win rate. That's not how we trade, guys. You need to have some kind of strategy in place. And this is how you beat the market, or the market beats you. I really don't know. Okay, so what you do is, to start off with, is you say, I'm going to have a $25,000 account. That's my account size. First thing you got to understand is you have to keep your account size the same at all times until you consciously decide to change the account size. In other words, don't try and compound an account. Don't try and let your account grow and grow and grow and grow and compound and become 30,000, then 40,000, and then suddenly you make a mistake and lose it all. No, take your profits out, put them in a relevant place, and leave the account at $25,000. And if you take losses, reevaluate your situation if you can't replenish the account. But try and keep your account size the same. In other words, for the future of that account, until such time as you decide in a few months or whatever the case that you want to change it, that's a $25,000 account. Now what you do is you say, I want to risk whatever percentage. Okay, so some people will risk 2%, some people will risk 0.5%. I risk 1% per trade. And my reasoning behind risking 1% per trade, if I lose 10 trades in a row, which you shouldn't, that's gargantuan, but if you do, you lose 10% of your account, you're still in business. If you start by risking 10% on every trade, you're on a leveraged account, you're probably going to lose the account. If you're not on a leveraged account, then you can risk 10% per trade quite easily. But keep that in mind. Leveraged accounts can be expensive. That's why I risk 1% per trade on every trade, and the same amount on every single trade. Do not change the amount, because the minute you change the risk amount because you feel better about that trade and not about that trade, that what happens is the ones that you felt better about lose and the ones that you felt bad about win, and then you're sort of on the wrong side of everything, because the idea is make more on the wins, lose less on the losses. Now here's where the big thing comes in, because you choose your stop loss. Now how you do this is you look at your trade and you say, where do I want my stop loss? Not tight stop loss, not fast stop loss, no. You want your stop loss where you look at the trade and say, if the price gets there, then this trade's worthless. This trade is invalid. That's where you want your stop loss. So the first thing you do is you pick your stop loss level, then you work out the size of your trade back to the cost. You go, I'm going to risk $250, which is 1% of my $25,000 account, and I can have 0.2 lots for that up until the cost. Now you know the size of your trade. That's your risk. And then you say, now I just got to look at this and make sure that this chart, with its history, can actually produce me a profit which is worth more than $250. That's as easy as it gets. But you see, the thing is, so many people will target $50, risking $250, and that to me is a form of insanity. Why would you risk so much for so little? You really need to make more on your wins and lose less on your losses. Now here's where the thing comes in, guys. Our brains have a thing in there called fear, and it's all about the psychology. And there's nothing we can do to get around that fear. I mean, if there's a dinosaur in your front yard, you're probably going to panic, and or if there's a saber-toothed tiger walking in your front door, it's not going to be great. You're going to run. Same thing goes for today's day and age. We have an inept fear of losing our material things and money and whatnot. And that fear kicks in and it takes over. And there's not a lot you can do about it. So what I find a lot of traders doing psychologically with the fear is, firstly, fear of missing out. Also, not wanting to take any loss. Patience is a big issue. But one of the big things here, guys, is when traders go into a loss, they tend to want to not lose at all. And then they don't understand that you do need to lose in the market because the market's 50-50. So then what they do is they try to dollar cost average it to get it back into profit. Or they move the stop loss away. Now you have to ask yourself this one question. Why did I put the stop loss there in the first place? And secondly, if I dollar cost average, am I not defeating the point here? Am I not going to increase my loss? Because what I ask you is, do you ever double up on your wins? You're in a winning trade, do you ever dollar cost average that and average that up, make it bigger? Do you ever follow your wins up? Do you ever push your take profit away? Or do you just like, oh, there's a profit, I'll quickly take that? Why do you work this the opposite way around? You see, what you have to do is switch your brain around and say, when it's in profit, that's when I want to be excited. That's when I want to be adding to the trade. That's when I want to be doubling up. That's when I want to be pushing my profits away. When it's in a loss, switch your mind around. When it's in a loss, I'm losing. I need to get out of this as quickly as possible. I don't want to lose more. If it looks like it's going to carry on losing, I need to dump it. I need to get out of here so that I don't take a massive loss, so that I don't take more loss than is absolutely necessary. Then you make more on your wins and you lose less on your losses. This is the way that you are going to get around the market. This is the way that you are going to beat the market over time. Now, the big thing here is to understand that you are going to lose. There are going to be losses. You're going to lose 5 out of 10 trades. But if you make them smaller, then the understanding becomes better. And once you understand this, you see, when you get into a market, you're a new trader. You start losing $1, the sweat starts coming off. You start going, oh, I'm losing. I've lost $5 now. I'm in real trouble. Yeah, that's what starts happening. I understand that. Everybody gets that. It's money. That's the fear. The fear kicks in and you start panicking. But over time, you build a threshold. What you have to learn is what that balance within yourself is. What is my threshold? How much can I take? How much pain can I take? and how big can my losses be. But that negates itself when you get the idea that you are going to lose a few trades and you are going to win a few trades, and I'm going to win more than I'm losing. Then the amount that you're losing becomes negligible and you forget about it. It doesn't matter to you anymore, because if you're risking $10,000 or you're risking $250, it really doesn't matter anymore, because you know on the winning side, you're playing for the bigger amounts and you're going to win more. You can play the bigger amounts much more confidently when you understand that you are going to take losses. You see, the whole point that you're panicking when you're taking a loss is because you don't understand this. It's because you don't understand that when you're taking a loss, you're going to get it back. Sink in, doesn't it? So then the losses don't affect you and the fear goes out the window. You start to get rid of the fear because now you know that you're going to take that amount of loss, but you're going to make that amount of win. So that amount doesn't matter anymore. Once you get around that, it starts to make things a lot easier for you. But how do you get to that point? You know, you've got to get over fear of missing out. So in other words, the trade goes $50 into profit when you've got a $250 risk and you click, woof, sell, get there. I want to take that money and run. Profit's a profit, isn't it? No, it isn't. That's the point. That's the whole point. It's not. You need to make more. And you only take that early profit when you need to. And there are many cases where you need to, and you're just going to have to run with that because you're looking for that big one. But many cases you have this great plan. You're going to take that big profit, and then things change in the market, particularly a year like this where it jumps up and down every 15 minutes in the USA and it's moving the markets up and down. It's pretty volatile. And suddenly the thing turns against you. And when that happens, you have to get out and take your profit for less than what you wanted in the first place. But you tried, okay? But at least you made a profit. When you're going into profit, move your stop losses up to cost or even into profit and start taking those small profits as well. It doesn't matter. They build up. They are there. You have to understand that that is going to happen. What I'm saying is don't deliberately take a $50 profit just because for the sake of it, you know, because it's there. No, let your trades run where they are capable of running. If you can see there's a capability that that trade can continue to run, let it run. But when it goes into a loss and it starts looking like it's going to go gargantuanly bad, that's when you need to sell it and you need to get out of the trade. Remember, guys, trading is insanely risky. Most people lose money, and 60 to 80% of traders actually lose money leverage trading. In fact, 99% lose on the 5-minute trades and day trading. It's a difficult game. This is not something that's easy. You have to understand this, and you have to understand that there are going to be losses. The main reason people lose is because they panic when they go into losing situations rather than managing it and managing the risk and working towards the bigger profits. This is the issue in most of the markets, most of the time these days, with people just understanding these things. Guys, while you're here, join the members area, support the channel, get your trade of the day every day, have a bit of fun with us, and join us for the live shows every Tuesday and Thursday. Have a bit of fun there as well. Tuesdays 1100 GMT plus 2, Thursdays 1400 GMT plus 2. And we have a lot of fun together. We've got a lovely team and a lovely community that we're building together here. And don't forget also to subscribe to the channel. Since you've watched this whole video, and I mean, it must have been pretty boring. Come on, you didn't want to know how to get around the market, did you? So yeah, don't forget to subscribe and, you know, stay with us, stay with the team at the end of the day. Guys, if you need a funded account, there are a couple of links in the description as well. Thanks for watching, and I hope that helps you. I hope that gives you some insight. And if it doesn't give you enough insight, go watch the last videos, which give you the systems and the strategy together. Lots of information that will make you a better trader. Till the next time, guys, keep your feet on the ground, reach for the sky, and we'll be together again soon. Cheers, ciao, and bye.